G'day everybody, I'm Gavin Lockyer, Managing Director of Arafura Resources, and we're developing the Nolans Neodymium-Praseodymium project in the Northern Territory of Australia.
Good to see you, Gavin. End of year conversation, roundup, maybe a look into next year as well. But we kind of agreed before we came on, might be worth getting a little update on NdPr market because things have moved significantly this year. So should we start with the old supply-demand fundamentals? Should we look at that?
Absolutely. Yeah, why not? I mean, this is a really exciting time for this particular market because, last time we saw prices spike was back in 2009, 2010, and that was predominantly around some geopolitical activity. But this time it's actually being driven by supply and demand, which is great to see because it gives the financial markets much more confidence in the market. Touching on the demand, we've had record EV sales throughout this year. Even with COVID, people are placing orders for electric vehicles. There's also been a reconfiguring of electric motors within China, where China has instigated retro fitting of electric motors into replacing older motors as they struggle with power shortages. So, some analysts are even saying that current demand for this year has been about 69,000 tonnes of NdPr oxide, and as early as 12 months ago, that was the forecast demand for 2025. So demand is certainly extremely strong.
Well, look, can we talk about the differences? Because if I'm buying into a thesis, right, I need to understand what I'm walking into. Because you talk about the last time it was this high was back in 2010. But they're for different reasons, right? Back then, we had China flexing its muscles and making some statements and cutting off rare earths because it could. This time round, it's been driven by fundamentals, and those are two very different drivers, right? Because I don't want to walk into a kind of spiky thematic here. I want to understand that this has got a ways to run. So, just in terms of those fundamentals and looking forward, am I to believe that NdPr will, the demand for NdPr will be consistent moving forward?
I believe so. I mean, the demand is growing strong, as I said, but on the flip side of that, and what is completely different to 2010 when the last spike happened, was on the supply side. China had the capability to simply flick the switch and bring more supply into the market. What we're finding now is that China is starting to import more and more material from other countries for processing inside China, simply to meet China's own demand requirements. Don't forget, China's got some pretty ambitious electric vehicle aspirations as well. So most analysts are saying within the next 2 years they'll become net importers of material.
Right.
So you've got China's also cleaning up its environmental policy in terms of minimizing impact of some unsustainable mining operations. It announced just last week or last month actually that it's consolidating the 6 big firms into 2 large firms, China Northern and China Southern, basically, together with a lack of material coming across from Myanmar. So you've got this real demand supply dynamic at this point in time driving prices up, which is great to see, because as I said, it's good to see them growing sustainably. It's been a steady growth throughout this year, and it's been sustainable, which is fantastic.
Right, and all this demand is coming, and people attribute all new demand to electric vehicles these days. It seems, but there's other industries as well that NdPr feeds into. I mean, again, for the beginner, it's just kind of worth understanding where the demand drivers are coming from.
Yep. Well, it's basically e-mobility, so your electric vehicles, but it's also renewable energy. So large offshore wind turbines need about 150 kilograms of neodymium-praseodymium magnet in each wind turbine. And as post-COVID reform starts to come in, with much of the EU looking towards e-mobility, renewable energy, cleaner energy technologies, the demand for rare earths, or neodymium and praseodymium in particular, is growing substantially. And you've got the auto sector in particular is really, really driving the phasing out of ICE engines, and so they're starting to set their procurement strategies now for longer term.
Do you think it feels like the analysts have kind of got this wrong, because it was a case of, forecasts suggested that, we'd be looking at 2030, etc., for the, real meaningful growth. But it seems to have accelerated somewhat. Is that entirely down to COVID, or was it just the analysts not quite calling it right?
Look, it's probably a little bit of both. COVID highlighted an issue that was always in the marketplace. When the magnet factories closed in China, many car makers had to stop production simply because they couldn't get rare earth magnets. And so that highlighted a situation, but it resolved itself throughout the last 12 to 18 months. But then again, now has popped up the issue with the semiconductors. So again, car manufacturers have had to halt production due to the inability to source a very small costing piece of machinery or software that is critical to the operation of that vehicle. So semiconductors and rare earth magnets are probably make up 0.1% of an electric vehicle, but without them, production stops. And so COVID probably amplified a situation that was already there because of the disruption to China. I think there was unprecedented growth in electric vehicle sales throughout this year, which has also put pressure on supply. And then you've had supply constraints coming through as China's, cleaning up its industry and consolidating. So it's a combination of all of that.
It's kind of interesting. I was speaking to a group last week with, I think it was to do with platinum, palladium, and so forth, and we were talking about issues around substitution, and also the fact that because of the chip shortages, it was affecting the ability for car manufacturers to actually deliver on time, and they were even having to question where they delivered to, and where they were using product at the higher end or the lower end. And with you guys with magnet, well, the NdPr is predominantly magnets for cars. Are you seeing any sort of slight faltering in terms of that those demand numbers?
Not at all. I think the auto sector is scrambling, to be perfectly honest. At the moment, they've been caught short a little bit through the semiconductor and also the NdPr supply disruptions. They have been focused historically on their battery materials, so the lithium, cobalt, graphite. Most of them have procured or secured supplies of that material, and that's understandable because the battery is about 30% of the cost of an electric vehicle. But again, if without the microchip and without the rare earth magnet, you don't have a vehicle. It just won't. It's not as efficient. You talked about substitution there. Well, yes, you can substitute out rare earth magnets, but it'll be a less efficient technology that you'll be using, which impacts the size of the battery, the weight of the car, and therefore the distance in which it can travel.
But don't you think that's kind of inevitable? Because we seem to be rushing headlong into, everyone diving into all cars must be electric. Everything we're hearing from nickel, copper, graphite, lithium, well, apart from lithium, is that we need everything that we can produce. And if we're designing all of these products into all vehicles, it's going to become problematic at some point. We come to some sort of supply crunch, and then pricing becomes an issue. So lower end vehicles surely need some degree of substitution to their designs, don't they? Look,
it possibly will, but I think what you'll see is that rare earth magnets will get substituted out of those other industries where they're not critical. For instance, an electric drill. You could take out the rare earth magnet and go back to the old iron magnet. Your drill's going to become much, much heavier, and it might not be a handheld drill, but it'll go, your supply will go where demand takes it. And, I think the electrification of motor fleets globally is here to stay.
Well, true, and I get to that degree. Then again, at some point in the future, there's going to need to be some price insensitivity as to where these products go into, and I guess mobility is probably one of the ones that should do better.
Look, I think just turning it to Arafura for the moment. Look, the discussions we've had with OEMs over the last 3 months has certainly escalated. There seems to be a bit of panic in terms of wanting to do something, but not quite sure what, because they're not, they haven't really thought this one through like they have done with their battery strategies. But I think what you're finding is that the European car makers are probably a little bit further behind than the Koreans and the Japanese. I think the Koreans and Japanese have realised that yes, this is price insensitive. It's about having security of supply, and I think Europe is playing catch up pretty quickly, but it's not quite as fast as some of those other countries I mentioned.
It's kind of interesting. The Koreans and the Japanese, it just seems a little bit more integrated in terms of the whole food chain and understanding where the margins can be made. Europeans seem to operate in isolation, but you're hearing that that's becoming less and less the case as they realize what's coming down the line.
When COVID hit and rare earth magnets were becoming in short supply into Europe, I think the response from the auto sector was, well, that's the magnet company's problem. They've got to source it. We've got a contract. But when the magnet companies started saying, well, we can't source it and we're not honouring that contract, suddenly the automaker realised they can't just bully these groups around, and really now starting to look into their supply chain and realising that they need to step in and they need to be part of the solution.
But if I look at some of the conversations we've had in the past, right, we've had some good conversations this year about where you're at. Maybe we should finish off the conversation in a second with regards to where you're at. But you've talked about the desire to look to Europe, look to the US, rather than insert yourself in some way into the Chinese supply chain, or quite frankly, even the Koreans and Japanese supply chain. So, what's your view of the way that the Europeans are tackling this? Are they going to move quicker? Because they only just started looking at it like it's new news. Are they going to have access to the capital that they want? There seems to be a lot of grants and funds floating around the EU. I can't speak to North America. But do you expect them to kind of get accelerate that process next year?
Oh, look, I think it'll be before next year. They'll have to do it before next year. And look, all the meetings we're having at the moment, and your question was specifically around Europe, the OEMs are certainly becoming a lot more active and a lot more, I guess, aggressive in terms of wanting to do something. In terms of, is there capital around? You just saw, I think there was a company, I think Volkswagen have just recently, Stellantis actually in Europe have just invested into a project, a lithium project, I think. So there's certainly capital around for the right projects. I think the European banking sector and the government export credit agencies are certainly aware of the situation, and I think government and ECAs have actually been trying to push industry a little bit along in this way. So I think the capital is there. I just think it has to be unlocked. And as you know, projects like ours need capital.
Well, you need a lot of capital, right? So, I mean, where are you with your conversations? You've been having lots of conversations this year. Obviously, domestically, there's some. You talked about $300 million available to you, but really you need to dip more than dip your toes into Europe. You need to get some level of commitment from a partner or partners there. So how are those conversations going?
Look, at the moment, we've got lots of discussions going on with end users and potential customers. But, I would have to say that probably 10 of those many customers would have certainly advanced term sheets with pricing included, volumes included. And if we were to execute every one of them, we would have sold 260% of our production. So it's a matter of which one's coming first. The other interesting thing that's really been coming to fore of recent months, probably especially this last quarter, has been that those OEMs are now even actually starting to talk about potential strategic equity placements into Arafura. And they're talking around that's directly linked to their security of supply. So they want fixed price, long-term contracts, and it's a matter of us bargaining to try and see what's the best deal for us, and obviously what's the best deal for the customer.
I mean, if I look at, I mean, the longer this goes on, I guess there's going to be some concern in the market, but the longer this goes on, with the way pricing has evolved this year, the way that supply, because if we look at Myanmar, who you mentioned earlier, they remain closed, right? And they're a big contributor to this. And the longer that remains closed, the better it is for your discussions with these guys, because these kind of moments dramatically change the economics for the OEMs and the like. So they probably want to get this closed as quickly as you do, I suspect.
Look, when we started this, some of these offtake discussions, we were talking about a range of pricing mechanisms in there. We needed price protection on the downside. They wanted price protection on the upside, and some just wanted fixed price. And when neodymium's or NdPr is trading at $50 a kilo, it's quite difficult to get it much higher. But if it stays at 130 a kilo for an extended period of time, then I think the goalposts change.
Yeah, I mean, and what is the expectation? Obviously, we can't speak to when Myanmar will open up, etc. But you must have a view, given the conversations that you're having, and so must the counterparty, about what they think is happening in the market going forward. Because, like I say, it's all well and good prices being, like they were in 2010, but then they came way off again. What we don't need is a kind of volatile market going forward. But the expectation is, because on the demand side, because of how things have evolved in terms of electrification of mobility, that 130 is a reasonable number to be working off of. Or are there discounts being applied?
We've got a range of pricing mechanisms, and it'll really come down to what we're prepared to give up and what the offtake is prepared to give in exchange for that. So, I'm not going to answer clearly one way or the other, but I think it's fair to say that we're talking about a range of pricing options and it depends on the customer too, as to what that might be. Now, if one party comes to the table and they've got a really good deal, then the others might miss out unless they can trump that deal. Right.
I guess what I'm trying to understand, and what I'm trying to help people understand, is a little bit more about the NdPr pricing, and more importantly the supply side, because that's going to, if obviously production opens up. We've seen various projects claiming to be able to produce, and obviously more product means cheaper pricing. So, are you sensing that the discussions that you're having will end up somewhere in and around the $100 mark, or that we are super peak pricing now and it's going to come way off and fall away?
I think long term we'll be looking at something 100 plus. To be honest,
okay.
I think we'll probably see a spike early next year, but I think longer term, it could be around the 120, 130 mark, somewhere around there.
Okay.
I think that's pretty reasonable for everybody concerned.
Okay, and I guess that helps people understand a little bit more around the economics if they care to do a little bit of work. So big moments for you next year are going to be, one, making some sort of decision around a strategic partner, whether it includes equity or just offtake or whatever. You'll let us know. But what's the timing of that?
Look, we're targeting FID second half of next year. In fact, the third quarter of next year. So by implication, before we get to that point, we're going to need all of those things you mentioned and more. So we'll need offtake. We'll need have lined up our equity, whether it be strategic equity and or a wider equity component. We'll obviously need to have our debt structure locked away. As you said, we've got 300 million from the Australian government. We would like to get, similar numbers from other countries and their export credit agencies. And obviously we've got to complete the front end engineering and design, and that will ultimately lead into a fixed price EPC contract, so we can start construction. We're hopeful that the wins are behind us, and if we can hit the ground running in 2022, there may even be an opportunity to start bringing forward some of our on-ground work and start some early construction work on site. So that would be an outstanding result.
Okay, I think that answers the question I was going to ask you. So, Gavin, thanks for the catch up on what's happening in the marketplace, and also thanks for coming on for an end of year roundup. We'll catch you early in the new year, see how things are moving, and indeed, whether you do start some early works. That'd be interesting and very indicative of how confident you are. So, have a great Christmas. We'll see you next year.
You too. Thanks for having us, and Merry Christmas to all your subscribers.